The Honourable Leanne Dalzell.
Mr Speaker, it feels like a kind of sense of deja vu here, but 3 years ago, almost to the month, I released, as part of a suite of 9 documents under the review of financial products and providers, a document focused on insurance, and that's the genesis for the bill that we are considering today. So obviously I'm very pleased to welcome it to the House and give my absolute assurance of support for its passage. Obviously there will be a detailed consideration at the Select Committee, and I'm sure there will be elements of the bill that different members of that committee will want to look at in detail. But I just thought it would be interesting just to remind the House about what the outcomes we were seeking as a government at the time from the insurance sector. And I think they're worthy of reflection in light of what's happened since this was tabled. The overall outcomes government is specifically seeking from the insurance sector are a sound and efficient insurance sector, facilitation of effective risk management, confidence in the insurance sector, and that's what my colleague who's just resumed his seat was talking about, that encourages participation by consumers, firms and providers, and not to compromise or constrain contestability, competitiveness and innovation in the insurance sector. The one word that I've circled on that page is the word innovation, because actually I think that perhaps now that we've looked at what's happened internationally, the word innovation may not be the right word when we're talking about the principles that underpin the quality of confidence that is required in our insurance industry. And when we look at what's happened with the failure of various banks and other institutions over in the United States, the failures that actually we were exempt from here because the out clause that those banks had in the US were not out clauses that our Reserve Bank allowed here in New Zealand. And that was the ability to insure against the risk of the almost impossible thought of the whole thing turning into a house of cards and crumbling. And that's exactly what happened in the United States. And of course, when AIG failed as well, that's when the whole house of cards came tumbling down. And we must never, ever, ever allow for that to happen. And I agree with my colleague who's resumed his seat that we cannot legislate for good behaviour, we cannot legislate for integrity, but we sure as hell can legislate in this Parliament for the kinds of checks and balances that will ensure that those that may have a dishonest approach or are negligent with other people's money, as we have seen, are able to be held to account and not able to get away with what has been able to get away with in other jurisdictions. And I'm glad we're talking positively about regulatory intervention. I think sometimes in this House we've got a bit risk-averse with the word regulation. Why don't we just call it the rules for protecting consumers? Let's not call it regulation if people are so cut up about the phrase. Rules for the protection of consumers, that's what we're talking about here. And we actually listed all the reasons for regulatory intervention back in 2006. Asymmetries of information and complexities. Who's got the information? Who knows what is what protection is there? Consumers need to be well informed about insurance products and providers through accessible, timely and easily understood information in order to assess which product and provider will best meet their financial needs. How many people in this House have read the small print on their insurance policy? I don't think there will be a single member in this House that would put up their hand and admit to that. The Associate Minister of Immigration, the Minister of Labour, she nods her head. She's read every last bit. Well, she was a lawyer, so I expect her to do that. I did have a legal background myself, and I can't say that I have ever read every single last bit of an insurance policy. But these are complex documents. There are complex agreements that people are entering into that they don't even begin to understand, which is why the consumer focus of the protection that regulation offers needs to be well understood. Issues of transferability. Once people are locked into an insurance policy and things go wrong with that, or things go wrong with you, I'm afraid it's not so easy to find another insurer. And anyone in this House that understands the nature of the expression pre-existing condition, as all of us who deal with ACC cases at the moment understand very well, pre-existing condition can lock you out of the cover of an alternative insurance provider if you are unable to continue with that provider for any particular reason. So that question about transferability is a huge reason why insurers have got this imbalance of power over consumers in many, many respects. And of course, if a policyholder is locked into a policy of a company that then falls over, then obviously that is a great issue as well. Unfair or unfraudulent conduct. That happens on both sides, participants, both insurers and policyholders themselves. There can be misleading practices on both sides of the equation, and therefore there does need to be some regulatory protection there. The questions of expectations and confidence, obviously we've got huge issues in terms of our exposure, obviously with large, close to the fault line here in Parliament. I think we're 400 metres from a fault line here, not that I like to remind anyone of that while we're actually in the building, but the question about the insurance liabilities following on from a large earthquake, those sorts of things, there are major issues with insurance, and of course we're protected from some of the huge costs that other countries have imposed on them because of course we have the wonderful ACC scheme which assists in respect to personal injury. And then we've got externalities around distress or failure in the insurance industry likely to pose a risk to the soundness of the financial system. And that potentially has international reputation impacts. And the other point that we made was that large-scale events like a natural disaster may have some implications for the economy in terms of business interruption. I recall very clearly the cost that was imposed on many, many countries around the world post-September 11, which wasn't a natural disaster, but was a disaster nonetheless. And what happened there was that the cost of reinsurance rates went through the roof. New Zealand completely protected because of our ACC scheme. So I think it is worthwhile mentioning that. So that was the basis of the consultation that went out to the general public, and I think it was a very, very good process. And I want to also place on record how responsive the insurance industry itself was to this process. They wanted to have their regulatory frameworks updated, modernised. Some of the insurance legislation, of course, is nearly a century old and does not in any way reflect the insurance market of today. So the insurance industry itself, huge ups to them in terms of their willingness to be engaged in this process. The review of financial products and providers announcements on all of the 9 discussion documents were made in June 2007. About 2 weeks before Bridgecorp collapsed, I think, was the tragic coincidence of events. But among them was the Cabinet decision in June 2007 that the Prudential regulatory authority for the insurance sector would be the Reserve Bank, and that's what this bill does today. And of course responsibility shifted from the Ministry of Economic Development to the Reserve Bank of New Zealand and the Office of the Minister of Finance. Essentially, Cabinet approved the overall architecture of the insurance prudential supervision regime in December 2007. Then we went out to get some further stakeholder engagement, and that essentially was signed off in May 2008. Those 4 principles that the government was guided by in terms of the decisions that were made throughout this process was the overall approach was to be the relatively light-handed approach to supervision and regulation of insurers. It was to be cost-effective, subject to meeting regulatory objectives and prudential requirements. Competitive neutrality was the principle that we adopted, and of course the benchmarking and consistency that we've heard others speak of today. Primary intention was to have the appropriate regime for New Zealand's circumstances, having regard to appropriate international best practice. I know that I'm running out of time, which I hadn't expected to happen, but what I will just simply comment on is a reference to clauses 198 to 208 of the bill, which provides special provisions for Lloyd's. And I don't know whether other members have contributed to the debate on this, but I know that I met with Lloyd's when I was in London a couple of years ago, and they were very keen to see this particular provision written to our law. So I do congratulate the government for taking up the proposal that was put forward. It is an important protection. This is an important advance for New Zealand, and I welcome its introduction to the House.
Well done. Here, here.